Hey, Wall Street winners. It is Friday, March the 15th, and at the current time, the S&P 500, Dow, and NASDAQ futures are all in the red. Not down significantly, but in the red going into the open. It's 8:35, 8:36 Eastern. And today is an interesting day because today is what they call a quadruple witching day in the market. And that means that 4 different sets of futures and options are set to expire today on March 15th. There are 4 other days this calendar year that are called that fall into the quad witching day category. Today, March 15th, June 21st, September 20th, and December 20th. And the typical outcome on a day like today is increased volume. So with the expiration of multiple stock index futures and options on stock index futures and single stock options and index options, they can all generate a fair bit of volatility and volume as traders try to close out their positions. So it's likely that we're in for a bit of volume today. Looking at the different sectors here and where stocks are pre-market, not paying too much attention to anything but oil and technology these days. So if we look at oil, crude is off this morning. It is down 62 cents. There is murmurs or talks that Saudi Arabia will begin increasing production again, and that could bring down the price of crude as they begin to participate to a greater extent in the oil market. But what we can see here is there is a fair bit of green on the pre-market screen going into the day, and even with crude down, not, again, a prediction of what's to come when the market opens with these, but it is likely that just with the volatility from the quadruple witching event that's occurring, there's some opportunities today in the crude space in the names that we've been following for quite some time. If we look into technology, technology has for the most part, been on an upward trend, but it has been a bit of a bumpy ride. And these are the types of days where there may be an opportunity to get in at a pullback, and then come the end of the day, see that that stock that dipped earlier in the day achieve a higher price than that which you paid for it earlier in the day. And that's always our goal. So as we go into today, the big one with earnings announcements yesterday was Adobe, and you can see that it is down significantly. So if you haven't purchased Adobe and don't hold it, could be an interesting day to get into Adobe. They came out with good earnings and beat estimates, but their second quarter forecast wasn't as strong as investors or the street analysts would have liked to see. So it's off 11% pre-market. Could dip further than that on open, as isn't uncommon as volume increases, because the volume pre-market and post-market is certainly not what it is during the trading day. So I would hold off on this and just see where the pattern starts to develop. At some point, it's going to hit a bottom, and then it usually pops back up a little bit. That's not to say it's going to stay there. It could then drop down again. So depending on, again, the volatility in this, there could be an opportunity to get in and out of Adobe today multiple times and take small profits on each of those entries and exits. Google is off a little bit pre-market. It had a great day yesterday, up $3.50. Nvidia was off a lot yesterday. Sorry, not a little. It's off a little now at minus $5 pre-market. It was off $30 yesterday. So it'll be interesting to see what this stock does. Pre-market, it's been up to $8.90 based on the chart we're looking at here, and now it's in the $8.75 range. It's likely that well, there's 2 scenarios here with Adobe. It's either going to fall through its resistance level, and then it could go much lower if it does that, or it's going to bounce off that resistance level and start to achieve its highs again. And based on everything that's going on with AI and everything in the economy, I have a feeling it's going to bounce off that resistance and start to achieve new highs again in the coming weeks. But that said, I don't have a crystal ball. That's not financial guidance. Make your own decisions, and that's just my feeling on what could happen there. Another stock that I really like is Meta. Facebook, and it's down at 491. It's been up into the mid 500s. If we look at this chart over the last 6 months, it's been up into the 500s. It had a huge spike, obviously, after its earnings in this first quarter, and it's done extremely well in the past 6 months. It's a cash generating machine. So on a pullback, I would definitely look at adding Meta to your holdings or portfolio, even as just a long-term hold and not an active trading hold. And then we go to the financials. There's again murmurs in the market of what Fed Powell is going to say when he starts to comment next week about interest rate cuts. I think the market is feeling that he's going to stick with 3 cuts this year starting in June, even despite the higher CPI and PPI data. We'll have to see what actually happens and what future data comes in the coming months that will help him to justify that decision, or help him and the other Fed chairman board members justify that information, or that decision. But that's where we are today. So I'm again kind of avoiding financials, just waiting on conversations next week and seeing where things go, because there is still some risk out there, in my opinion, with the commercial mortgages and that whole sector that we've really not been talking about. And a lot of those are coming due this year. So just looking at how that may have potential negative effects on particularly the smaller regional banks, but those effects will roll up and affect all banks in the sector. So that's where we are today. Good luck with your trades. Be aware that it is a quadruple witching day and there will be a ton of volume today. So act accordingly, and I wish you all the best in your trading. If you're liking these videos, subscribe to